This presentation provides a brief overview of the AlterTax tool, which is available in RunGTAP and used to change the tax information recorded in the GTAP database. Let's assume we'd like to simulate a trade liberalization scenario between countries A and B using the GTAP model and database. In the database, users may find that the import tax on goods imported by country B from country A is X%. However, this may not match information the user has. So, why does this discrepancy exist? Broadly speaking, the GTAP database consists of observed trade and macroeconomic data, combined with the best available data on the domestic economy and policy settings, the latter of which are adjusted to represent a common base year and to be consistent with the former. In some cases, users may have better information regarding the import tax on specific good and trading partners than what was used to construct the GTAP database. Before proceeding with the trade liberalization analysis, though, they'll want to adjust the import tax rate to use their data instead. Before we talk about how to change a tax rate in the GTAP database, let's first cover some best practices according to Gerard Malcolm, who authored GTAP Technical Paper number 12, Adjusting Tax Rates in the GTAP Database. First, you should use the AlterTax tool that is available in RunGTAP and allows users to change tax rates in an initial pre-simulation GTAP database, while preserving the internal consistency and limiting the effects of the change on the structure of the economy. Second, it's important to understand that it's not desirable to simply change one tax and leave the rest of the database unchanged, because doing so will destroy the internal consistency of the database. Third, please refrain from altering tax rates directly through the tax rates file, as it's not read into the model, and thereby doesn't affect the model database. The GTAP model computes implied tax rates based on the database during runtime, rendering the tax rates file ineffective. Additionally, please refrain from modifying the database manually without proper simulation to reflect new tax rates, as it'll lead to database imbalances. Instead, please use the AlterTax tool for adjusting tax rates, as it conducts a simulation and ensures the internal consistency of the database, while updating tax rates automatically. Fourth, in order to maintain the overall balance and consistency of the database, it's necessary to change the tax in question and allow the other flows in the database to adjust. And finally, it should also be noted that, as is practical, users should limit the effects of the change on other flows. Now that we've covered best practices, let's talk a bit about the AlterTax tool itself. AlterTax is a simulation similar to other experiments within the model and uses the model itself to create a new database. A simulation's run where tax rates are shocked to their desired value, and the GTAP model is used to calculate how this affects other flows. During this action, a general equilibrium closure ensures that internal consistency is maintained. The updated post-simulation database can then be used for subsequent policy experiments. The difference between the policy experiment and this procedure is that in policy experiments, model structure and parameter values are chosen to represent economic reality as accurately as possible, while in AlterTax they are chosen to minimize disturbances to the database. This procedure requires special closure and parameter files to minimize disturbances. The RunGTAP software creates these files for new versions. Please keep in mind that when we say version in the context of RunGTAP, we're referring to an aggregation of the GTAP database that's used together with the GTAP model. On the previous slide, I mentioned that the AlterTax procedure requires special closure and parameter files. If we examine this further, we find that AlterTax simulation closures are designed to minimize the changes to the rest of the database when tax changes are incorporated, and that the closure for an AlterTax experiment fixes regional trade balances. Moving over to the parameter file, We need to understand that these are set such that tax rate changing simulations leave other costs in sales shares changed as little as possible. Specifically, parameters are set such that production and consumption are Cobb-Douglas. In production, substitution between different intermediate inputs and the composite primary factor are introduced with the elasticity set to 1. As with the above, trade elasticities or the Armington parameters are also set to 1. And finally, all endowment commodities are modeled as mobile across sectors within the region. I do want to take time to note that the aim of AlterTax is to improve the quality of base year data in instances where improved information pertaining to that base year is available. This procedure is not appropriate for incorporating information which postdates the base year. For example, if you wanted to introduce information on 2018 changes in tariffs due to US-China trade frictions into the 2014 database, using AlterTax to do so would be equivalent to making the assumption that changes in tariffs have minimal effect on the structure of the global economy. The correct approach to modeling impacts of these tariffs would be to use the regional GTAP model and allow trade flows to change, thereby estimating how the global economy would look with these new tariffs in place. I've included a few references on this slide you might be interested in reviewing as you move forward with using the AlterTax tool in your GTAP modeling. The first is the GTAP technical paper already mentioned, where AlterTax is documented, and the second is a frequently used teaching document called Hands-on Computing with RunGTAP and WinGem to introduce GTAP and GEMPAK, and gives several examples of hands-on computing you can carry out to familiarize yourself with the RunGTAP and GEMPAK software packages. Now that we've covered a basic overview of AlterTax, let's look at the example we'll cover in our demonstration. Before we start, if you'd like to follow along, make sure you have the RunGTAP software installed on your computer. As a reminder, RunGTAP is freely available on the GTAP website. Once in RunGTAP, we'll use the in-course 3x3 version that has a 1995 reference year and 3 sectors by 3 regions. During the demonstration, we'll look at analyzing a unilateral trade liberalization the European Union undertakes with sub-Saharan Africa, and adjust the ad valorem tariffs on imports of food from sub-Saharan Africa into the EU. Let's now transition over to RunGTAP, where I'll begin the demonstration. On my screen, you'll see that I already have RunGTAP open. Inside the software, we first need to change to the in-course 3x3 version. To do this, select Version from the main menu and then select Change. From the Load Version menu that appears, scroll down and select In-Course 3x3 and then click OK. Now that we've loaded the In-Course 3x3 version, let's get started with adjusting the tax rate. From the main menu, click Tools and then select AlterTax. Click OK when prompted. RunGTAP will offer to load the AlterTax closure and parameter files. Click OK. RunGTAP now prompts you to use the Shocks page to set tax rate targets. Click OK again, which now lands us on the closure page. In the AlterTax closure, regional trade balance ratios to global income are fixed in all regions except one. Let's look at how this is achieved in the closure in greater detail. To fix regional trade balances, the AlterTax closure designates del_T-ball-re as exogenous for all regions except one, while making CGD/SLAC endogenous for all regions except one. These adjustments can be manually implemented through a swap statement within the closure. Alternatively, RunGTAP can automatically generate an AlterTax closure with each new version at runtime. In this closure, if you look at the list of exogenous variables, you'll note that there's an exclamation mark preceding the CGD/SLAC variable. In this tab, anything written after an exclamation mark is a comment, which means that it's not read into the code. The exclamation mark before CGD Slack therefore indicates that CGD Slack is no longer listed as an exogenous variable. At the bottom of the list under AlterTax simulation, comments clarify that del_tbal_re is designated as exogenous for all regions except one. This is achieved by adding the exogenous del_tbal_re variable for specific regions like SSA and the EU, which leaves rest of world as the residual region. Hence, del_tbal_re for rest of world is endogenous. Given that in general equilibrium the last market adjusts, rest of world automatically adjusts, rendering CGD Slack exogenous for rest of world, as is listed at the bottom of the exogenous variables list. Once all exogenous variables are identified, rest endogenous is specified at the bottom of the closure tab. This alternate approach to balancing trade can also be achieved through a swap statement, requiring the definition of a new set for the residual region and ensuring its exclusion from the swap statement. The AlterTax closure depends on the regional aggregation, so you need to make sure that you have the correct regional sets in the AlterTax closure. In the tab menu at the top, click on the Shocks tab. On this page, from the Variable to Shock dropdown, select TMS, which is an exogenous variable representing % change in the power of import tax. Now let's specify our elements to shock. Select Food from the first drop-down, the exporting region of Sub-Saharan Africa from the second, and European Union as the importing region from the third. From the type of shock drop-down, select % target rate, and then enter 10 for the shock value, which represents the target import tax rate that we want to adjust. Click the Add to Shock List button and you'll see the shock to TMS is about -2.7%. Let's take a moment to look at how RunGTAP calculates this shock. The initial power of the import tax was about 1.13. The new power, which is our target, is 1.1. This means that the % change in the power of import tax is about -2.69%, which matches what we've just seen in our example. Now that we've defined the new closure and shocks, we can proceed to finalize our AlterTax experiment. The solution method and parameters file for the experiment can be determined on the Solve tab. RunGTAP automatically selects the GRAG method with 2-4-6-step extrapolation and automatic accuracy, which we will maintain. Additionally, the AlterTax parameter file has also been uploaded. Let's explore the contents of the AlterTax parameters file by navigating to the top menu and selecting View, and then Parameters. In the AlterTax simulation, all consumption and production functions are set equal to Cobb-Douglas specification to ensure that the budget shares are fixed during the tax updates. To accomplish this, the AlterTax parameters file incorporates changes in parameter values. Let's take a look at some of the parameters to see the differences. The first two parameters, subpar and incpar, are the substitution and expansion parameters in the private household CD minimum expenditure function. To make the consumption function Cobb-Douglas, subpar is set to 0 and incpar is set to 1. This specification ensures that price changes are offset by equiproportionate volume changes. For example, let's look at incpar. In the default parameters file, incpar values would vary across commodities and regions. However, for the AlterTax simulation, they're all set equal to 1. Let's now go back to the Contents page. Similarly, the highlighted substitution parameters are all set to 1. Let's look at E sub D as an example. In the default parameters file, these values would vary across commodities, but in our AlterTax simulation, they're all set to 1. You can verify the Cobb-Douglas specification and other elasticity values noting that E sub S and E sub G were already equal to 1 in the default parameters file, as international transport margin services and government demand are already treated as Cobb-Douglas in the standard model. Another important difference in AlterTax is that all endowments are treated as mobile. This is governed by the endowment flag binary parameter, which specifies which endowments will be treated as mobile, sluggish, or fixed. In the default setting, land is assumed to be sluggish, labor and capital are mobile, and natural resources are sector-specific or fixed. In AlterTax, they're all treated as mobile by setting the endow flag binary parameter to 1, which identifies the endowment sets in the model tab file. Let's click to return to the contents page. Finally, the ROR delta parameter is set equal to 1, which changes the way in which investment is governed in the model. In previous models, the ROR delta parameter was typically set to 0, indicating fixed regional investment shares. However, in the AlterTax simulation, ROR delta is set to 1, indicating the adoption of the rate of return investment model. Let's now go back to the AlterTax simulation by closing the parameters file, and we'll solve the experiment by clicking the Solve button. When prompted, there's no need to save this experiment, so click No. After RunGTAP finishes running the simulation, click OK on the accuracy summary, and then OK again. RunGTAP will then tell you that the shocks list was changed and ask again if you want to save the experiment. We'll click No. Now that the simulation has completed, the ad valorem import tax on food from sub-Saharan Africa to the European Union should be 10%, so let's compare the two to check this. First, let's look at the initial tax rates by selecting View, then Base Data, and Tax Rates from the main menu. In the baserate.har file that opens, the last header listed is our TMS, which contains information on initial tax rates. Double-click to open this header, and then select Food from Sub-Saharan Africa into the European Union. As you can see, this equals 13%. Close this file, and now we'll compare it to the adjusted tax rate. From the main menu, go to View, then Updated Data, and Updated Tax Rates. Again, locate the RTMS header and double-click to open it. Select Food from Sub-Saharan Africa to the European Union. And as we can see, the updated tax rate is 10%. The updated data files from the AlterTax simulation contain new tariff information. The natural next step would be to create a new version in RunGTAP that considers this updated data as the new base data. To do this, select Version from the main menu, and then click New, which will open the new version wizard. On this screen, click the Next button, and in the Based On section, make sure Same Aggregation as Current Version is selected. Under Adapt Current Version by, select Using Updated Database from last simulation. Then enter a new version name. Since we're working on a new trade liberalization, I'm going to call this new TL. Click Next, Next again, and then Finish to complete the steps in the wizard. When prompted about switching to a new version, click OK. If you receive a prompt about a bad closure, click OK. When RunGTAP completes its build, click OK, which will take us to the results page. When you switch to the new version we just created, you can check that the ad valorem tariff rate on imports of food from sub-Saharan Africa to the European Union is 10% by going to View in the main menu, selecting Base Data, and then Tax Rates. From there, our baserate.har file opens, and if you double-click the RTMS header, and again specify Food from sub-Saharan Africa into the European Union, You'll find that it shows 10% as the import tax. That final step wraps up our demonstration. For more information on AlterTax, you can review the RunGTAP Help menu or GTAP Technical Paper number 12 that was discussed earlier in the presentation. Thank you for watching this overview and demonstration of the AlterTax tool and learning more about adjusting tax rates in the GTAP database. Best of luck with your GTAP modeling, and please feel free to contact the Center for Global Trade Analysis if you have any questions.